point growth as well. On the DBJ segment, as in there is the mechanics of operations between organized and unorganized is very different, and so we are focusing on the mechanics that the existing players offer in the organized segment, and it's an extremely underpenetrated segment. I don't know if, like Colonel mentioned during our last call, there are more than 1 lakh plus BAS registered jewelers, and the existing players cater hardly to a few thousands of them. So it's a large unpenetrated market, and with our strong on-the-ground presence till that last mile, we believe we'll be able to offer a much better quality of service at competitive rates to the jewelers, so that they migrate to, so that we have a right to win of those incremental market share.
Okay. So on the DBJ front, you're saying we are kind of cost competitive versus not only the organized segment, but even the unorganized as well? Or are we primarily competitive versus the organized itself?
Okay. So as we understand, the difference between organized and unorganized is, the difference between organized and unorganized is not because of, not so much the pricing difference.
Okay.
Yeah. It is to do with billing, GST, additional costs, etc. So we are definitely competitive vis-a-vis the existing players, and we see the unit economics there. Again, it is like in RCMS business. It's a high fixed cost and a high incremental gross margin business. So to that extent, we believe once we reach that critical threshold volume, we'll be fairly competitive to take healthy profitability.
Understood. And so if you could provide a kind of broad breakdown between on the touchpoint front, the gross addition for this quarter, if you could provide the number, please.
Sorry, we don't have that ready, but as I said, it is slightly lower than the incremental numbers that the guidance numbers that we had indicated. Probably about ballpark in the range of about 2,500 to 2,600 for the quarter.
Okay, understood. Thank you, sir. That's it from my side.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of Aditya Shroff from InCred Asset Management. Please go ahead.
Yeah. Hello, good morning, sir. Am I audible?
Yes, please.
Hello. Yeah. So, sir, my first question was, so currently, regarding top line growth, we are currently growing at around 8 to 9% on a year-on-year basis, versus the competitors who continue to grow at 19 to 20%. So is there any chance that we are losing market share?
No, there's no, I mean, you see, when we talk about the competition, they're also into other segments where we are not present. We are largely into retail cash management, and there, if you see the growth, it is the same as far as the competitor is also concerned. So, I don't think that there is any change in the growth. I mean, now, currently, as I said earlier, we are looking at, this is a gestation period. We are deeply investing into other aligned sectors while we continue to strengthen our core business, and we are focusing on continued growth in this segment as well. So the investments that we are making now in diamond bullion and jewelry, which is currently actually impacting our numbers, is all going to turn into a positive thing in the middle term. So that's the way that we are going forward.
So when can we expect the diamond bullion and jewelry segment to generate revenues? From which quarter maybe?
So we are currently clocking roughly about 7 crore annual run rate, growing at a very healthy clip on a small base. So over the next 2-3 quarters, we should be breaking even, and that's the expectation.
Okay. Yes, so my second question was, so we have added some investments of around rupees 11 crore, which is visible in our balance sheet this quarter. So I just wanted to understand what are these investments and can we expect higher other income from the next quarter onwards?
This 11 crore investment we have made on the S-Ware Fintech Services, where we acquired about 58% stake, not on the bullion business.
Okay, understood. And lastly, why was the finance cost higher in this quarter? So it has increased from around rupees. Hello.
See, there are two reasons for that. One is this: we have acquired fintech, yes money fintech, by investing about 11.2 crores. Second reason is we have also our capex during the last quarter was higher. Out of 200, as I told earlier, we have purchased 200 vehicles. The bulk of that has come in the third quarter, and hence our finance cost has increased during the current quarter.
Okay, understood.
Thank you. A reminder to all participants, you may press star and 1 to ask question. Next question is from the line of Sarvesh Mutta from Antique Stock Broking Limited. Please go ahead.
Yeah, hi, good morning. I'm continuing on the question from the previous participant. So what we were saying that our performance was impacted by the DBJ business, but it still does not answer the question wherein why the revenues, the growth rate of revenue is so low. Like this quarter it was just 8% year on year, last quarter was just 6%. And in the presentation we mentioned that the retail cash management business should grow at 17% year on year for next 3-4 years. But that kind of growth we are not showing in the numbers.
Yeah. I explained it during my initial thing as well as in the first question. Individual subsegments, we are witnessing healthy growth in BFSI, in organized retail, in petroleum. It's flat in railways and negative growth, flat in railways and negative growth in e-commerce segment. So the 8% is a combination of these individual subsegment growths. And we, as I said, we are addressing that e-commerce segment, so which should help us reach a healthy growth in top line. And on top of it, our incremental businesses from direct sales, incremental business from RVL should help us reach the guidance numbers over the medium term.
But sir, in every quarter we are seeing one or the other line of business blowing off. So sometimes it's petroleum, sometimes it's something else. Then how do we stabilize from here?
That's the nature of a competitive business. Management is taking conscious efforts. The opportunity is huge, like CMD mentioned, and we are strengthening our direct sales team. We are fairly confident of the guidance numbers being met. So we'll like to add about the opportunity.
Yeah, now like we have also moved into Insta Credit, where entire streets can be a customer, wherever so that we are not only based on wholesale clients, but we can also look at individual clients. Every single shop that is there can be a client, and so that's one product. And now that's one of the reasons that we have also invested in Radiant Ace Money, where each of these business correspondents is a potential client for us. So the point I want to re-emphasize is that we are a network company with the most dense network in the whole country, and now optimizing that network with a large number of additional pickups or delivery points on each of the routes that we have currently doing is the way that the revenue is going to grow. I've also repeatedly pointed out that including diamond bullion and jewelry, we are looking at this year as a year for consolidation, and there is going to be a gestation period in the new businesses that we have recently got into or acquired and take it forward.
Okay. And sir, just final point I wanted to highlight. Sir, on the presentation, there are many errors in the presentation. So if I see, like, why there is on the industries and segments on slide 7, I couldn't find it. What exactly, if you can just clarify on that, the industries, which exactly is 33 and 16% and 17%, the top three ones?
Yeah. If you could see, go to slide number 7.
So the industry.
Slide 7 is giving you individual sub-segments, but these percentages as a percentage of the total for the quarter. So if you could see, BFSI has moved from 29% to 33%. So 29% of 93 crores versus 33% of 101 crores. So you can see that math and see that. E-commerce has grown more or less. Organized retail is again moved from 16 to 17% on a larger base. E-com logistics is the one which has dropped from 8% to 5%. Railways is flat. Petroleum has grown from 2 to 4%. So all of these matches with what we just spoke.
Okay.
In the yeah.
Thank you. Next question is from the line of Imran from Longbow, India. Please go ahead.
Yeah. Hi. Thanks for the opportunity. Sir, can you maybe enlighten us on the dividend that you paid in the last 2 quarters and not paid this time? So can you share your thoughts around the dividend part of the business?
No, we are a very strongly dividend-paying company, and we are on track to that. And it's carefully planned out. We had earlier, last year, we had given it in 2 parts as an interim dividend and a final dividend. This time it will be a final dividend which will be announced it will be during the period of August.
And how one should think about it? What percentage of your profits would be dividend? If you can share that, if it is possible.
No, that would not be right at this time for me to speak about it. But let's say that is something that we believe in and that will be followed.
Thank you. Thanks.
Thank you. Next question is from the line of Asim from DAM Capital Advisors. Please go ahead.
Yeah, hi, good morning. So I had a couple of queries on the industry per se. So I wanted to understand the Frost & Sullivan chart that you have in your presentation about the addressable retail outlets. So I just focus on the FY21 number, assuming that is close to reality. In that we have 3 million as the total addressable retail outlets, of which 450,000 are organized and 110,000 are those that are using the service today. So my questions are, should the 450,000 number be assumed as a true market for retail cash management and not the total 3 million number, given that most of the 3 million number would be much more smaller mom-and-pop stores? And second, of the 110,000 touchpoints are using the service, how many would be outsourced to third-party players like Radiant CMS, and how many are being done by banks themselves?
So, the 110,000, that is a rated number. The number could be close to about 140,000 today. And banks either offer this service and outsource it or don't offer this service. There is no question of banks servicing these points themselves. So bank cannot send its own staff to go and pick up cash with armed guards and security. So 100% of that is outsourced. Point 1. On your other question, whether it is, in fact, 150,000 and the number that you are, and the 3 million. In fact, we are talking of, now we are talking of 2 crore is the total number of retail outlets. And with our acquisition in Ace Money, we believe each one of these 2 crores could be a potential customer. That is 20 million, not even 3 million. Each of these 20 million could be a potential customer where we can pick up cash or we can deliver cash. So yes, we can leave out the really small mom and pop stores, but even a mid-size retail outlet which is transacting even as low as 10,000-20,000 in cash in a day will be a potential customer for us. Like Colonel mentioned, with the development of Insta Credit, if there's a street, every shop in the street is a potential customer. So we are definitely bullish on the growth opportunities. Earlier, the services offered only when the banks offered this to their end customers. With Insta Credit and with our focus on direct customers, we believe the opportunities are humongous.
See, one more point I'd like to add on to what Mr. Muthuraman has said. The opportunity is humongous. I don't know whether we can communicate it to all of you in the course of this discussion. But what we see here today as a group, it's a huge and humongous opportunity. But the point I'd like to make is that when you're going to direct clients, the aspect of due diligence, because now money is got to be handed over, so we are finding that there is a delay or it's taking time before they're coming on board. And this is something that we are unable to wish away. And that's why somehow in terms of the timelines, it is taking a little more time to get them on board. But the clients are very much there. The numbers have already been specified by Mr. Muthuraman. And we are extremely bullish on this and looking forward.
Okay, interesting. Just one clarification. So the 3 million was pertaining to the retail industry. The 20 million number that you talked about, that would be much beyond retail, right?
Yeah, we pick up from schools, colleges, even liquor outlets. We pick up from education institutes, small pharmacies. It's a whole host of sub-segments. Anywhere there is a cash collection, either on a daily or a periodic basis, that's a potential point for pickup.
The 30 lakh customers that we earlier spoke about are the organized retail points which are there in the country, of which today the entire industry together is doing about 140,000 to 150,000 points, of which we are doing close to about 66,000 points. But what now Muthuraman specified is that now everybody requires the service. So not only looking at organized retail, but we are trying to look at even those who are part of the unorganized sector.
Okay.
And that takes us to a much larger number, which he was mentioning as, about 2 crore such points are there. We are trying to see how we can make it work with them as well. And that's the market that we are looking at and how we can grow into that.
Understood. I mean, just a friendly suggestion. Maybe you want to, elaborate a little bit more on this potential market. At least I didn't spot it in our current Q3 presentation. Just, you want to talk about how large the market actually is beyond the retail touch points, and you having a first mover advantage in the smaller cities kind of gives you the advantage per se. Okay. Second query is basically on the growth that we have done in the 9-month period. I mean, the 8% that we have, would it entirely be touch point led, or is there some element of, like for like same store growth also here?
It's both account for it. I would put if you see our touch points growth has been on 4,200 points on 63,000 points. Okay, that's little less than 6% or so. The rest of it would have come from same store sales growth, about 1 to 2%.
And in the 17 to 18% growth you are expecting ahead, would you be able to talk about, how much would that be touchpoint led and how much would that be like for like? And within the like for like portion also, would it be more throughput led or is there a pricing growth element as well?
This will actually come from the number of touch points. As I specified earlier, we are currently in conversation with a large number of direct clientele where the conversion is taking us a little while longer than we expected. And we are also looking at all these smaller outlets which also deserve these services and how we can reach out to them. Because in the developed West, every outlet is given an opportunity to avail of these services, and that's what we are currently trying to achieve here as well.
Understood. Okay. Just this last one question. You mentioned Radiant Insta Credit. Sorry, what exactly is that?
Radiant Insta Credit is that, whenever we go to an outlet, like now, where we are offering the service to outlets, the moment the pickup is done, the credit is given instantaneously to them.
For a fee.
Okay.
In terms of an online transfer into their account. So there is no requirement of any kind of, any collateral security like a bank guarantee or anything. They get instantaneous credit. But this is for very small collections. It can't be for larger collections.
Right. Okay, thanks. Thanks a lot for answering my questions and all the best.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. Next question is from the line of Chinmay Nema from Prescient Capital Investment Advisors LLP. Please go ahead.
Good morning, sir. Thank you for taking my questions. Could you elaborate, this is double click from previous participant's question, could you elaborate on Insta Credit, like what types of credit is given, what are the terms of the loan?
I'm sorry, your voice is not clear. Can you just repeat your question, please?
Could you elaborate what Insta Credit is? Just double click on previous participant's question. What are the terms of credit? Is it high yield credit? Just if you could provide some more color on it.
No, the credit doesn't mean that we are giving any loans or lending. There is no high yield. It is instantly crediting the account of the retailer.
Okay, got it.
Thanks.
Thank you. A reminder to all participants, you may press star and 1 to ask questions. As there are no further questions, I would now like to hand the conference over to Mr. Sohail Halai from Antique Stock Broking for closing comments.
Thank you, Leah. So before we close, I just have one question from my side. You actually did mention that Radiant is not losing market share and probably the network management has a very dense network, which probably other players cannot compete in. So just wanted to understand what has changed in terms of the growth trajectory, which was running at around 20% to around 8 to 9% for Radiant, as well as if you're not losing the market share for the industry. Is it the pricing? Is it any alternate solutions for these retailers that has come up? Or what has led to a slowdown in the industry growth? If you could elaborate on that.
Yeah. Yes, Sohail, this is Muthuraman. Yeah, it's a combination of all these three aspects that you mentioned. One is that the one subsegment, e-com logistics, we spoke about, that they have alternate solution to which our Insta Credit is the risk mitigant that we are expecting that will get set right. Yes, there have been some pricing pressure as well. It's a competitive industry, so there has been some pricing pressure. But for us, the counter to that is to increase the number of points so that our profitability, our top line as well as profitability gets restored. So we are working out ways to increase our both bank-led as well as direct customers. And these are the two key reasons for the muted growth compared to what we witnessed in the past. But as in essence, from the feedback from the market that we get on the day-to-day interactions, we are firmly leading this market, and there is no loss of market share at all.
And so just in terms of attaching to this, you said that the Econ Logistics actually got an alternate solution. So can you mention what are the alternate solutions that you are working on, and why can't some of the other larger players can adopt same, and probably that could lead to a slowdown in the revenue in future as well?
No,
for the industry.
No, the loss of revenue is being addressed through our technology solution, including the InstaCredit that we are offering. So with that, we should be able to address that and restore our growth in that segment.
Sure, sir. And so finally, in terms of if we actually look at FY25, so 17-18% kind of a growth on the core business. Are we on the similar guidance, 18 to 20% kind of a growth for the core business, excluding the DVJ?
No, not only the core business. It's a combination of all. As a company, as a consolidated revenues, 17 to 19% is what our guidance is.
Okay. Thanks, sir. This is very elaborative. So thank you, sir, Colonel sir and the team for giving us this opportunity to host the call. Would like to now hand over to the call to Colonel sir for his closing remarks.
Thank you very much, Sohail, and thank you for a very well-organized call for us. As investors, I can say, I thank you for your time. You all can be assured that we are well positioned to capitalize on the growing retail market footprint and the continued relevance of cash transactions in India. Our approach aligns perfectly with the market dynamics, enabling us to tap into the vast unserved market and drive sustained growth. I want to express my gratitude for your continued support for Radiant. We are confident that our focused approach and strong performance will yield promising results for all stakeholders. Thank you very much for your time and your continued interest in our company. Thank you very much.
Thank you. On behalf of Antique Stock Broking, that concludes this conference. Thank you for joining us, and you may now disconnect your lines.